So imagine you're laser focused on all these currency trends, and then bam, suddenly there's this massive political shift.
Yeah, I can see how that would throw a wrench in things, for sure.
So where do you even begin to navigate that? Well, that's exactly what we're here to break down today.
Absolutely.
Our source material for this deep dive is an article called Trump's U.S. Presidency Return Ushers in a New Era of Volatile Markets.
Catchy title.
It is, right.
Yes.
And it really gets to the heart of what we're discussing. This article suggests that the potential impact of Trump's policies, on things like trade, immigration, regulation, it could send shockwaves through the Forex market.
Yeah.
So let's unpack all of this. What do you think?
Sounds good to me. I think the first thing to remember is that for Forex traders especially, political events, they aren't just background noise.
Right.
They're these vital trading signals. And with someone like Trump, whose policies, really made a mark on the markets last time he was in office, well, this is something you've got to pay attention to.
So true. Okay, so let's dive into this Trump effect. What kind of market movements did we actually see during his first presidency?
Well, for example, the S&P 500 grew by almost 68%.
Wow.
Yeah, sounds pretty fantastic on the surface. But it wasn't all smooth sailing. There were definitely these periods of serious volatility, driven in part by his famous trade wars.
Oh, yeah. Those were big news.
Huge. And they really highlight how political decisions can create both risk and opportunity for Forex traders.
It's not just about riding the wave of overall growth then, but also being able to navigate those choppy waters.
Exactly. And to do that, well, you've really got to understand the why behind those market movements. A good example is inflation and interest rates. During Trump's last term, we saw pretty persistent inflation.
We did.
And this led markets to believe that the Federal Reserve might actually end its interest rate cutting cycle sooner than expected, which then affected the momentum of the stock market and, created this ripple effect that ultimately reached the Forex market.
Okay, so how does this complex interplay between inflation and interest rates and political decisions specifically impact Forex trading?
Well, for Forex traders, understanding this dynamic is key to being able to predict those currency fluctuations. For example, let's say a trader anticipates that Trump's policies are going to lead to higher inflation.
Okay.
Well, they might change their trading strategies based on that, maybe favoring currencies that are likely to appreciate in that kind of inflationary environment.
Interesting.
Makes sense.
Now, the article we're looking at today also points to a few hot-button issues that could be, big market movers.
Right.
Things like tariffs, immigration, and regulation.
Yeah, those are big ones.
What are some of the nuances that Forex traders really need to understand about these specific issues?
Okay, well, let's start with tariffs. They have a very direct impact on currencies. So let's say, just as a hypothetical, the U.S. imposes tariffs on goods coming in from China.
Got it.
That could weaken the Chinese yuan against the U.S. dollar, creating an opportunity for traders who anticipate this shift.
Right. So it's almost like this domino effect. You disrupt the trade flows and potentially trigger, those trade wars we were just talking about.
Yeah, exactly.
Okay, so what about immigration policies? How do those fit in?
Well, immigration policies are really intricately linked to currency flows and even overall economic growth. If a country tightens up its immigration policies, for instance, that can have a ripple effect on currency valuations, potentially leading to depreciation.
Got it. So Forex traders need to keep a close eye on the political climate surrounding immigration as well. Now, what about deregulation? How does that factor into all of this?
Deregulation can be a bit of a double-edged sword.
Okay.
While it can be a boom for certain sectors, like maybe crypto or banking, it can also lead to increased risk and volatility. For Forex traders, this means more opportunities for profit, but also a bigger need for vigilance and careful risk management.
It's a high-stakes game. To really help our listeners grasp the real-world implications of all of this, let's look at some specific examples, like how did companies actually fare during Trump's previous presidency?
Sure. A good example is Tesla. Their stock just soared during Trump's first term, partly due to his emphasis on deregulation in the tech sector.
Yeah, it was quite a ride for Tesla. Any other interesting examples come to mind?
Bitcoin also saw a pretty big jump, over 30% after Trump's initial election victory. This was driven by optimism about a potentially, more crypto-friendly regulatory environment.
Interesting. What about the private prison industry? Didn't they also see some significant gains?
Absolutely. Geo Group and CoreCivic, two of the major players in that sector, saw their stock prices climb quite a bit. And this was because investors anticipated that a crackdown on immigration under Trump could lead to an increased demand for detention centers.
So it all really ties back to those policy changes we were discussing, right? It's like a chain reaction that savvy Forex traders need to learn to anticipate.
Exactly. And that's where thinking beyond the headlines really comes into play. Markets are always forward-looking.
Okay.
They often react to anticipated policy changes before those policies are even implemented.
So it's not just about reacting to the news then. It's almost like you're playing chess. You're thinking several moves ahead.
You got it. It's about connecting those dots, understanding the political landscape, and being able to predict how those decisions are going to ripple through the market. That's where the real opportunities lie for Forex traders.
So you've really got to stay ahead of the curve.
Absolutely. And to do that, let's dig a little deeper into some of the less obvious areas where Trump's policies might create those ripples in the Forex market. What are some of those second and third order effects that most people miss? This is where it gets really interesting. So let's explore those less obvious areas, the ones where Trump's policies could have a real impact on the Forex market.
I'm all ears. Where should Forex traders be looking, to capitalize on these less obvious impacts?
One area to keep an eye on is the U.S. dollar's role, as the global reserve currency.
Okay, yeah.
Trump's policies, particularly the ones dealing with trade and foreign relations, they could actually weaken that status.
Okay, that sounds significant. How could that even happen?
Well, think about it this way. If his policies end up creating this global instability or, shake confidence in the U.S. economy, other countries, they might start looking for alternative reserve currencies.
Wow. That would be a huge shift, for the entire global financial landscape. What kind of impact could that have on Forex traders specifically?
Well, it could really impact the value of the dollar. And that would lead to shifts in those exchange rates, across the board, meaning Forex traders who can see those shifts coming, they're going to be in a prime position to profit.
So it's not just about following economic indicators then. Forex traders need to really understand the whole geopolitical picture too.
Exactly. It's all connected. Another less obvious area to think about is regulatory arbitrage.
Okay. Regulatory arbitrage. I'm not familiar with that one. Can you break that down for our listeners?
Sure. Let's say, just as a hypothetical, the U.S. relaxes regulations on a certain industry.
Okay.
Companies in that industry, they might move their operations overseas to take advantage of those, looser regulations.
Right.
And that shift in capital flows, well, it can directly impact currency valuations.
Okay, so if companies are pulling their money out of the U.S., that could weaken the dollar, right?
Yeah.
And that would create opportunities for Forex traders to short the dollar and maybe buy currencies that are expected to appreciate.
Exactly. Forex traders who understand these dynamics, they can capitalize on those trends. It's about thinking beyond individual companies or even sectors and understanding how those macro trends are going to impact those currency flows and exchange rates.
So we've been talking a lot about risks. What about opportunities? Where might Forex traders find those in this new landscape with Trump back in charge?
Well, one potential opportunity lies in finding currencies that stand to benefit from his policies. Let's say, for instance, he goes ahead with those big infrastructure projects he's talked about. That could lead to a huge surge in demand for commodities.
Okay, yeah, that makes sense. So which currencies would benefit the most in that scenario?
Currencies of those countries that export commodities. They could see their currency appreciate. Imagine if demand for oil and gas skyrockets because of all this infrastructure spending.
Right.
The currencies of those major oil-producing countries, well, they could really see a big jump.
Interesting. So Forex traders should definitely be keeping an eye on those commodity markets. Are there any other potential opportunities that you can think of?
Volatility itself, it can actually be an opportunity. People often see it as a negative thing.
Right.
But skilled Forex traders, they can use it to their advantage.
How so?
It's about being able to identify those big price swings and then capitalizing on them.
So you have to be really nimble, knowing exactly when to buy and when to sell.
Exactly. And that takes a deep understanding of the factors that are driving those swings, which brings us back to why political analysis is so important.
It's like a feedback loop. The more you understand about the political landscape, the better equipped you are to predict those market movements and profit from them.
Exactly.
Throughout this whole conversation, I keep thinking about the global impact. The article is really focused on the U.S., but it's an interconnected world. What happens in the U.S. has ripple effects everywhere.
That's a really crucial point. The decisions made in the U.S., they definitely don't stay within U.S. borders.
So where should Forex traders be looking to see those global ripples? What are the key areas to watch?
Trade is a big one. If Trump goes down that protectionist road again, it could trigger retaliation from other countries, which could easily escalate into, a whole cascade of trade tensions. And that would inevitably impact those currency markets.
So Forex traders really need to pay attention to those potential trade wars and how they could affect currency valuations.
For sure. Another thing to watch is what happens in those emerging markets. They tend to be more vulnerable to shifts in U.S. policy, both economically and politically.
Can you give an example of how that might play out, in the Forex market specifically?
Sure. Let's say the U.S. slaps tariffs on goods from a particular emerging market.
Okay.
That country's currency could depreciate because their exports are going down and investors are getting nervous. Forex traders who see that coming, they could profit by shorting that currency.
So you need a really good understanding of the specific vulnerabilities of those different emerging markets. Anything else to consider on the global stage?
Global risk sentiment, that's another important factor. Trump's policies could create uncertainty in the markets. And that might lead investors to seek refuge in those safe haven currencies, like the Swiss franc or the Japanese yen.
So those safe haven currencies are important to watch too.
Absolutely. They're kind of a barometer for global risk aversion. If those currencies are strengthening, it could be a sign that investors are getting more cautious, more risk averse.
It seems like Forex trading in the age of Trump is going to be pretty complex.
It is.
But also potentially very rewarding.
It is. It is. For those willing to put in the time, to really understand the interplay of politics and economics, there are definitely opportunities out there. But you need diligence, you need foresight, and you definitely need to be willing to dig deeper than those headlines.
Speaking of digging deeper, I'd love to explore those potential second and third order effects of Trump's return on the global stage. The article focuses mainly on the impact within the U.S. But how are other countries going to react?
That's a great question. The global implications they're fascinating to think about. For example, how might existing alliances shift? What new partnerships might we see emerge, and which ones might start to weaken? I mean, the potential for this geopolitical realignment it's huge.
Like a giant chess game. Every move has these cascading consequences.
Exactly. And for Forex traders, being able to understand those consequences, that's the key to staying ahead of the curve and capitalizing on the opportunities that come with this new era.
So it seems like the Forex market, it's going to be pretty interesting with Trump back in the White House. Maybe a little bit bumpy, too.
Definitely. Like we've been saying, if you do your research, really understand what's going on, there's definitely potential to make some money.
But it's not just about, jumping in head first, is it?
No, not at all. I mean, especially now with all this volatility, information, it's really key. Forex traders have got to understand the political scene, the economic forces, and most importantly, how those two things interact. That's what creates those big waves in the market.
You got to be able to connect the dots.
Yeah.
Yeah. Anticipate what's coming, not just react to what's already happened.
Exactly. And that means thinking outside the box a little bit, looking beyond what's obvious, thinking about those second and third order effects. Those are the things that most people miss.
And those are the things that can give a trader a real advantage.
Absolutely. Before we wrap up, I just want to leave our listeners with one final thought. This whole deep dive, we've really been focusing on the U.S. side of things, the impact on the U.S., but the world, it's all connected. What happens in the U.S., it's going to have ripple effects everywhere.
Right. So it's not just about understanding what's going on in the U.S. It's about anticipating how other countries are going to react, how they're going to adjust.
Exactly. How will these political shifts change global trade? Which currencies are going to benefit? Which ones are going to struggle? These are the questions that Forex traders need to be thinking about.
It's a really dynamic landscape, constantly changing.
Mm-hmm.
But if you're willing to put in the work, to think strategically, there's a lot of opportunity out there.
Mm-hmm. Well said. So on that note, I think we'll let our listeners continue their own deep dive into the world of Forex trading in the age of Trump.
It's going to be quite a ride.
It will be. Happy trading, everyone.